Assalamualaikum warahmatullahi wabarakatuh. So today our group will present about our interview sessions with PT Wong and Co, which was held on 28 February 2025.
Next, I will be introducing our group members. The first one, AISHA ANNIDA binti Muhammad AZLAN. Next, we have HAZIRAH binti ARZAHAR, FARHANNA IMAN binti Muhammad AFFANDI, RAFIQAH ALISA binti Muhammad KAMAL ARIFFIN. The context that will be explained in this slide is about the first is group audit. Using the work of others, 3 issue is fraud, audit tools and information technology, and Sharia audit and audit oversight board. The first is about the group audit. So actually, in PT Wong and Co does not involve in group audit. So due to that, we refer to other references, which is in SCCA. What is the group audit? So group audit is responsible for forming an opinion on the overall financial statement. This process involves auditing both the parent's company and company which is subsidiary. So there is 5 audit process in a group audit. First is about the group audit acceptance consideration. So this evaluation ensures that the group auditor can rely on the work of component auditor and that the consolidated financial statements are free from material misstatement. The second is group audit planning. Throughout planning help in addressing the complexity of group audit and ensures that all significant areas are appropriately audited. Third is communication with component auditor. Its regular and clear communication ensure that the group auditor is well informed about the work performed at the component level and any issue that may affect the group audit. Fourth is the consolidation process. A true audit of the consolidation process ensure that the group financial statement present a true and fair view of the group financial position. Lastly is group audit procedure. This procedure help in detecting and addressing any issue that could lead to material misstatement in the group financial statement. Next is about the responsibility of group auditor and component auditor. The group auditor is plan the group audit, guide component auditor and ensure they follow proper procedure, check if component auditor are qualified and independent. Next is give clear instruction and receive update from component auditor. And lastly is review audit finding from component to ensure accuracy before issuing the final report. Responsible of component auditor is audit financial statement of the subsidiary as per group auditor instruction, report error, risk or unusual transaction to the group auditor. Lastly is share document and explanation when the group auditor requests them. Next is the type of group audit report. There is 4, which is first is unqualified, free of material misstatement, and auditor satisfied with the accuracy and completeness of report. Second is qualified. Some issues are identified but material do not affect the overall financial statement. Third is adverse. Serious misstatement are found and group financial statement do not comply with accounting standard. Last is disclaimer of opinion. When the auditor cannot obtain sufficient appropriate audit evidence due to scope limitation. The problem and recommendation for group audit. So the first problem is poor coordination in group audit. Component auditor is absent. Group auditor must handle the subsidiary leading to work overload. This can cause delay and inefficiency in the audit process. The second is error and late submission by subsidiary account. The accountant often make mistake which is incorrect double entry and submit financial report late, make it delay group audit processes and force auditor to spend extra time. For the recommendation of the problem is improve audit team coordination, which is clearly assigned role to audit junior, senior and manager to avoid overload and prevent inefficiency of audit process. The second recommendation for the second problem is train subsidiary accountant and set clear guideline. Provide proper training for accounting practices to reduce error and enforce strict deadline for submission of financial report.
So next, let's see the overview using the work of others. External auditor rely on other experts. Here is what we got the information from PT Wong. First one is experts involved and circumstances. There's 3. First is financial institution, bank, to verify bank balances accuracy in bank statement. Second, appraisers, gold, real estate, to ensure asset valuation aligns with industry standards. Third, legal counsel, lawyer, to assess potential legal settlement cost or damage. So next, let's see the impact to audit process. For the good impact, first, enhance audit quality. Expert provide specialized knowledge, making the audit more accurate. Second, increase audit efficiency. Experts help auditors understand complicated issues and reducing errors. For the bad impact, audit process delays. Experts may take time to respond to slow down the audit process. Next is the problem and recommendation for using the work of others. First problem is inability to resolve issues. Relying on experts may delay auditors in obtaining information. Second, lack of sufficient audit evidence. Experts may not provide complete documentation, may make it difficult for auditors to confirm the accuracy and reliability of financial statement. Third, struggling in understanding expert terms. Experts such as appraiser or lawyer may provide complex assumptions or their own terms that auditors may not fully understand. Next is the recommendation for the problem. First, qualified opinion due to unresolved issue. The auditor may qualify the item in the audit opinion if the issue cannot be resolved. Second, qualified opinion for insufficient evidence. The auditor may issue a qualified opinion due to insufficient evidence. Third, independent research on expert terms. The auditor perform independent research to better understand the expert terms.
So the next is current issues on fraud. So during our interview with the PT Wong and Co, they don't have any opinion on this. So I sourced this case study from the external sources. So it is about the fraud scandals and corporate collapses for the Enron case study. So what happened in this Enron case study is Enron, once the major energy company, collapsed in 2001 due to accounting fraud and corporate misconduct. The company used special purpose entities or SPs to hide its debt and inflate profits. Strategy misled investors by presenting a false image of financial success. Additionally, false financial statements created a sense of stability and profitability that was far from reality. So the impact from these scandals which is the consequences from the Enron's collapse was severe. Investors lost billions of dollars, employees lost their jobs and pensions, and trust in corporate governance was shaken. So in response, stricter financial regulations were introduced, most notably the Sarbanes-Oxley Act 2022, which aimed to improve the corporate accountability and prevent similar frauds in the future. So this is the problems and its recommendations based on the case mentioned. So the first problem is the lack of corporate governance and transparency, where the board of directors failed to oversee the key financial transactions, which it allow high risk accounting practices. The second one, where there is accounting fraud, where they use SPEs to mislead investors. And the last one is conflict of interest, where the CFO personally benefited from the fraudulent activities. So the recommendations for the problems mentioned, they need to improve corporate oversight and transparency, where the BOD should actively monitor financial transactions and enforce ethical business practices, and they need to implement strict financial disclosure policies to prevent falsifications of financial statement. And they must avoid COI, which is the conflict of interest, to ensure none personally benefit from the corporate dealings. Next problem is when the auditor failure and weak whistleblower protections. So Enron's auditor, named Arthur Andersons, failed to report fraudulent activities due to financial dependence on Enron, and the employees who raised concerns were ignored, which it allowed fraud continue to unchecked. The recommendations for these problems is they need to enhance independent auditing and protect whistleblower. So they need to implement a stronger whistleblower system, where they need to encourage employees to report fraud without fear of retaliation, and the regulatory bodies must conduct regular audits and impose strict penalties for any violations of accounting standards.
Next, I'll be explaining about Sharia audit. So the definition basically explains about a structured process of reviewing financial statements to ensure that they comply with the Sharia laws and also regulations. So the fundamental aspects of Sharia audit, we have three. The first one, Sharia audit is based from legal framework from Sharia Governance Framework SGF by Bank Negara Malaysia, and also AAOIFI, which means Accounting and Auditing Organisation for Islamic Financial Institutions. The Sharia principle that the Sharia auditors need to take a look into is the prohibition of riba, which is interest, gharar, which means uncertainty, and maisir means gambling. Then only halal business activities are accepted. Next is they need to be ethical and professional integrity, which means that they must follow the code of ethics by AAOIFI, which means taqwa, righteousness, amanah, trustworthiness, sid, honesty, and also al-ad, which means fairness. How Sharia audit works, the first one, they will have a risk assessment and planning, that they must identify the compliance risks, review policies, and also pass audits, and also Sharia rulings. They also have to execute and evaluate to check whether the financial records and transactions comply with the Islamic laws. Then they conduct interviews with the key stakeholders. Then they audit reporting and recommend to identify non-compliance issues to suggest corrective actions, and also to report to the Sharia Supervisory Board, which is SSB. Next, they need to follow up and monitoring to ensure corrective actions are applied and to improve the compliance monitoring. Then the importance of the Sharia audit, we have three. The first one is to ensure compliance, which Islamic bank corrected non-compliant investment products. Then we have strengthening governance. Sharia audit will improve internal control and also financial transparency, and also it will support Islamic finance growth, which means audits help to standardize practices to expand Sharia compliant finance globally. Next, we move to Audit Oversight Board, which basically means it was formed in 2010 to oversee auditors of public interest entities, PIEs, in Malaysia. It is to ensure audit quality, compliance with standards, and also regulatory enforcement. The requirements for this Audit Oversight Board, first, you need to comply with ISQC, which basically means International Standard on Quality Control 1, which explains audit firms are required to show evidence to AOB that they have complied with ISQC 1. Next, they need to do regular inspections, which means AOB inspects audit firms to ensure compliance with auditing standards. And then they need to do enforcement action, which explains that AOB has the power to issue penalties and deregister firms for non-compliance. The importance for this, the first one is to PIE and audit firms, is to ensure that audits to meet quality standards and are performed with professional skepticism. As for investors, stakeholders, and general public, the independent oversight role of AOB increases confidence in financial statements. And lastly, regulators, corporate boards, and financial institutions is to act as a safeguard against substandard audits and non-compliance. Next, the advantages of Audit Oversight Board. The first one is to enhance audit quality with ISQC1 and auditing regulations, ensuring higher audit quality and professional skepticism. Next is to strengthen public and investor confidence, increases trust in financial statement and reinforces the credibility of audits. The next one is to ensure compliance and accountability. Audit firms must now register with AOB to maintain proper documentation and undergo regular inspections to uphold audit standards.
So next is overview of audit tools and information technology IT. So here is the information that we got from PT Wong. So previously, auditors rely on Microsoft Excel, increasing error risk from manual data entry, causing financial misstatements, inefficiencies, and reduce audit accuracy and reliability. So hence, to enhance accuracy and audit quality, auditors use AirBot software, which automates financial data capture, processes transaction efficiently, minimizes manual errors, improve reliability, and ensure compliance with regulations. The problem and recommendation for IT. First problem is complicated IT systems. Auditors may find it difficult to understand how complex IT system function, which can lead to missed errors and delays in the audit process. Second problem is system downtime and data loss. Auditors may experience IT system crash, downtime, and lose data due to technical failures, which lead to auditors are hard to access the necessary records when they need it the most. Recommendation for the problem. First, get IT training. Auditors attend training programs on audit software, AirBot, to improve their technical skills. By participating in this training session, they can also earn relevant certification. Second recommendation, ensure regular data backups. Auditors implement automated backup systems to store copies of important data, thus allowing auditors to access information even if the system crashes. That's all from us. Thank you for listening.